Have you heard about income investing versus growth investing? And are you wondering about the pros and cons of income investing, which has gotten very, very popular, allowing people to retire a little bit earlier than they had planned? In this video, I'm going to share with you the pros and cons of income investing. Hi, I'm Camille Gaines, and I write about creating income streams and wealth building after 50 over at retirecertain.com. In this video, I want to share, the pros and cons of income investing. Income investing has gotten really, really popular. There's this huge movement, especially among the millennials, to retire early and focus on income investing and dividend investing, while the older generation, like me, that are headed into retirement, or the people that are actually already retired, think about the old traditional way of living in retirement, and that is by using retirement withdrawal methods, and that's simply withdrawing a certain amount of money every month to pay your bills in retirement. So in this video, I want to talk about, though, income investing versus not withdrawing money from your accounts to live during retirement. So you may be familiar that there are two major reasons why people invest, two major goals. One is for income and the other is for growth. And growth usually happens when you're younger and you're building wealth and you have a long time to build wealth, while income investing is usually done when you're not earning income from employment or from a small business. You want to generate income to live off of from your investments. It's during the time when you're living off investments. So the first con that I want to mention, I'm going to start with the bad stuff about income investing. The first thing that I want to mention is that the income can vary from month to month. So let me give you a good example of this. Dividend investing can be really variable and hard to predict, or not necessarily predict so much as plan around monthly spending. So this is because dividend investments are usually paid quarterly, or dividend payments, I should say, are usually paid quarterly. And so that money won't come into your brokerage account, every single month if it's paid quarterly, right? So there is a way you can kind of stagger this and make it more predictable, but that's sort of putting the cart before the horse, I would say, because the main thing is to find, good companies that are paying good dividends. So that's one of the problems with income investing, is that it's not always steady. Another common income investment for stock investors is covered call writing, and covered call writing is also variable. Maybe with the method that I like, you sell covered calls maybe 4 to 6 weeks out, and the income is just, there's a lot of variation on it depending on what you can sell those call options for that month. And then of course REITs and MLPs also are very popular income investing assets, and the income can either be paid monthly from those, or the income can be paid quarterly for those. So it's just a little uneven from month to month, and that makes it a little bit harder, but that's not really a big deal, and it can certainly be worked around. Now, the next thing I want to mention is one of my favorite assets for generating income is small business ownership. And my preference is starting your own business, but also I think that there's a lot of, really a lot of potential in buying online businesses as well. And so that income is variable as well. So that's one of the bad things about planning on that investing income every month, is that it's going to be variable, but no big deal, right? That's a really good problem to have, right? Okay, and then the next con that I want to mention is that the yields are really low now from income investments. They've been low for a long time, and it's hard to get much income from your investments. Now, I'm going to mostly focus on the more traditional investments like stocks and bonds versus small business in this video, because that's just what most people are doing. So income, for example, from a stock-focused portfolio, I should say a stock income focused portfolio, maybe in dividend type of stocks, and treasury bonds, U.S. treasury bonds, which is a very traditional way of investing. It's not how I invest, but it's very common. That's what most people have in their retirement accounts if they're being managed by someone, or they're following a traditional method. So say it's in sort of income focused dividend stocks, and not the S&P 500, a little higher than that, and also in treasury bonds, 30-year treasury bonds, for example. So the income from that would only be around 3.5% a month. Now, don't get mad at me. I've done another video and on this whole thing, and I have people that get really mad and say, no, it's 10% a year, yada, yada. It's not. The income is what I'm talking about. It's the interest and the dividend that you would get from a traditional, sort of standard investment portfolio that's a little more focused on income because it has those higher dividend stocks. But even so, we can't go crazy saying it's going to be 6% on most funds or most managed accounts that dividend focused wealth managers are investing in for their clients. It's closer to 3.5%. The dividend aristocrats are, many of them are way under 3%, and they're well known. So that's another video. But just keep in mind that that's one of the really big problems now with income investing, is that the yields are so incredibly low. And it can be worked around by diversifying into more alternative assets and or creating some sort of passive income, or not necessarily passive, but small business income is what I should say, some of which is passive, but a lot of it's not passive. I'll be very honest with you. And then the next con that I want to mention is that you usually have to pay taxes on the income from your investment. So income investing can lead to taxes. There are a lot of tax benefits around investment income. So I certainly don't want to go into this in this video. You can check with your CPA, but taxes can be a problem for you depending on where the money, what account it's coming into, and if you're withdrawing that money, and what type of income you're generating from your investment. So just check it out. I'll just plant that seed. And that's a lot of reason people don't invest in income investments when they have high employment income, because they don't want that extra income to trigger them into a higher tax rate, or they want to make sure that they're being efficient with the way their strategy is around their investing and their taxes. And then the next con that I want to mention is that income investments typically lag the growth stocks, the high-flying growth stocks during bull markets. So those markets that are really strong and really focused on growth, when the economy has recently come out of a recession and it's turned around and the economy is in a period of rapid growth, those income investments often lag the market a little bit. It's a trade-off, between growth and income, but I don't feel like it has to be, because I like buying undervalued securities at any point in time, but that's another video also. Let me give you the sixth con that I came up with for income investing, and I've been investing for almost 40 years now, so I've done this myself, a lot of this. And the next con I want to mention is bear markets decrease your net worth during your stocks decline. Let me rephrase that. Your stocks go down in value during bear markets, and that means your net worth goes down in value. Whether or not you decide to ride out the bear market or sell your stocks, you always hear, well, don't sell your stocks, ride out the bear market. I'm not suggesting that. I'm just saying that's kind of the prevalent thinking around this. But what does happen is your net worth declines when stocks go down. So that is, that's a big negative. We don't like to see our net worth drop, right? Even though we know the bear market is temporary and stocks will again grow and our net worth will eventually increase again over time. The older you get, the harder it is to experience that, right? So that was the last con I wanted to mention. Now, so those are the cons of income investing. Now I'm going to talk about the pros of income investing. The first pro is that the money keeps rolling in. The income keeps coming in even during bear markets. And that is really a nice thing to happen, right? If the value of your stocks decline, yet you're still receiving those dividend payments or interest payments or other income from your assets, your income investments, then that really can be, well, it's a wonderful thing, right? And it really goes back to what your investing goal is, like I talked about earlier, whether you're really wanting income or growth. But when that income comes in, even if the stock market is declining overall, it's a really good thing, right? And a lot of people have high enough net worth that they can simply live off of their dividend income, even if the stocks go up and down, as we all know that they will over time. So that's the very first pro that I want to mention. The second pro that I want to mention about income investing is that by structuring your investments in a way that you generate income, you can lessen the amount that you have to withdraw to live on using something like a standard, a typical retirement withdrawal method of 2 to 3, 4%. 4% is kind of the old rule of thumb. Because when you withdraw that money, you're really withdrawing your money and spending it, right? You're withdrawing your money that you've saved. And while that money has grown over time and you probably have some income, some dividends, smaller dividends and things in there, you're still spending your savings. And there's something kind of negative about that. On the other hand, if you have some investments that are generating a higher income that allow you to live off of that income, then you can withdraw less money during retirement. And that may be something that you have, perhaps some real estate rentals, some online business, or you may even have some things like REITs or MLPs inside of your retirement accounts that are generating a higher income. Maybe you write covered calls, which is a great way to increase income on stocks you already own. Okay, so that's the second pro that I want to mention. The third pro that I really love about traditional investing income is that it's so passive. There's just not a lot of work in collecting dividends in your brokerage account, right? They just, you do the research, and that's super important, and that does take time. But then they're just there, and I love that about stock dividend income, about bond income. So that's a big plus, right? Passive is good. And then the fourth pro that I want to mention is that many of the assets, I should say, that are used for income investing are very, very liquid, like the stocks and the bonds, the MLPs, the REITs. Those can be sold immediately, and you can have access to those funds without having to sell something like a real estate property, which would take longer. But most traditional income investing assets are very, very liquid, and they're easy to sell, so you can get your money right away. So those are the pros and cons that I wanted to share with you in this video from income investing. If you liked this information and want to see my new videos, be sure you subscribe to my channel. I'd love it if you click the little thumbs up below the video and let me know that you liked this video if you did in fact enjoy it. Thanks for watching.